Hi, and welcome to the Sunday strategy session. This is going to be a jam-packed episode. Today, I'll be breaking down just exactly why Bitcoin is pumping. They are lying to you. This is not because of the Blackrock Bitcoin ETF. No, there are other reasons why Bitcoin is pumping, macroeconomic reasons. So today on Sunday strategy session, I'm going to break down just exactly why Bitcoin is going on this massive rally. The chart that just flipped bullish that could change everything, as well as why Ethereum is set to melt faces this coming bull run. That's right. Today on the strategy session, we're going to be going over when everybody's looking left, we go right, because we're playing chess here. So I'm going to prepare you for the next moves before everybody else starts doing it. That's what we're doing here on this channel. We're staying one step ahead. And also, I'm going to give you a surprise altcoin at the end that could be one of the next altcoins primed for a spot ETF that absolutely no one is talking about. So if you like all that, stay tuned and hit that subscribe button. You'll be getting daily videos in my 200 day to Bitcoin halving countdown to get you prepared for one of the most epic bull runs in Bitcoin history. So without further ado, I'm your host, Megan Nilsson, aka Crypto Megan, tuning in from sunny southern Spain, Marbella. And let's dive right into it. So as we enter the era of institutional money flowing into Bitcoin, or as Michael Saylor puts it, Wall Street is getting plugged into Bitcoin, there is a lot to unpack in this episode. I love this picture because it's just so symbolic of what's happening right now and how small we are, the Bitcoin and the crypto markets, compared to all of the sovereign wealth in the world. So here's this $27 trillion giant with all of these conglomerates, BlackRock, Bank of America, Goldman Sachs, JP Morgan, Fidelity, Morgan Stanley, coming in on this massive cargo ship. Then we got MicroStrategy, which is the publicly traded company with the most Bitcoin holdings in the world. Michael Saylor is the CEO of MicroStrategy. And then we've got Bitcoin on a little rowboat as a $600 billion asset. It is so small in the grand scheme of things. So today I'm going to unpack just exactly why we're having this pump, because it actually isn't the BlackRock ETF narrative. It is in the chart. It is baked in the cycle, in the halving, and also has to do with the macroeconomic cycles. So let's get started. Here, I'd just like to start off with this chart. This is the macro Bitcoin chart. We're on the daily right now. And I always like to take you back to what happened last cycle because it's easy to forget. And we really do need to think about how we're going to plan this cycle in terms of what's happened in previous cycles, because they never repeat, but they often rhyme. So here we have the 6-month block from 6 months up until running into the halving. The last halving was in May 2020, and this 6 months marks historically the absolute best time to buy Bitcoin before the parabolic price increase, according to Plan B's chart. Okay, so here we are now just entering this 6 month prior to halving box, and we just broke a 2-year resistance level for Bitcoin. We've been in this entire consolidation below here for 2 years almost. And it also just broke above a 10-month trend line, which is this one. So a lot of things are lining up for Bitcoin to be massively bullish in the coming days. But I'm going to show you another chart that just flipped bullish that could change everything. So this is the total 1 day. And the thing about this chart is it's just a market cap chart. So it's basically showing us how big Bitcoin is, and you can also chart this on the charts as well, based on its market cap and where it's headed. So we just made this massive cup and handle formation, and we're just now breaking out and retesting that cup and handle formation at $1.27 trillion for the total market cap of crypto. So this is a telling chart because after breaking out of such a consolidation, our target to the upside is 1.8 trillion, and that's just on this move. So like I said before, I believe that Bitcoin is gearing up to have some bullish weeks and bullish months ahead. And the whole idea of a new cycle is that we need to get new money coming into Bitcoin. New money needs to come into crypto in order to start this bull run. So I want you to have a look at these charts here. This is from Crypto Trading Revolution. I'm a part of their crypto trading group. It is absolutely phenomenal. If you want to learn how to trade, go and check that out. It's Crypto Revolution. It's also got a YouTube channel. And these are some charts just kind of mapping out where we were. This is comparing actually the 2017 cycle. Okay, so this is basically showing where we are at now compared to that cycle. And I think this is a really cool chart because it really does help you contextualize things. It will never be exactly the same, but we get an idea of where we could be at. So this marks the high and the drawdown. Here we had the high and the drawdown here to our low. In the 2014-17 cycle, it was 414 days from the high to the low. This cycle had been 375 days from the high to the low. And then we started to form this ascending triangle formation before then going into the next cycle or the bullish cycle before the halving. So here we are nowadays. We are right here. We just broke out of this ascending triangle and people are still thinking this is a fake out. Things are different. We're still in the denial phase of the Wall Street cheat sheet. People don't fully know yet. They don't know where they tread. They're kind of like going forward carefully, thinking that this time is going to be different. But will it? I'll explain in the next couple of slides here that I have for you. But basically, after Bitcoin broke out of this ascending triangle in this cycle, we went and so here you can see we consolidated on the 618. That's the golden pocket for Bitcoin. Bitcoin loves to consolidate on the 618. And as soon as we broke out of that, we came up to this ascending triangle measured move point. So as you can see here, it shot up to this measured move, and then we eventually retraced all the way back down to our base of this move, which at the time was $500. Can you believe that? $500. This time, that base of this ascending triangle would be around 32,000, which is interesting because that's a lot of confluence compared to all the other charts. So as long as we're above 32,000, we're doing pretty damn good. We're doing pretty well. So we just had this move, and now according to this past cycle, we could shoot all the way up to 48 to 50,000. What did I tell you? I believe by the end of the year, the best case scenario for Bitcoin could be anywhere between 45 to 50,000. I don't think we're going to go higher than that by the end of the year, but according to this chart, that's also another point of confluence. That could happen, and eventually we could have that retest of this base where we broke out of this symmetrical triangle. And I have told you guys in previous episodes that it is highly likely and usually does happen that Bitcoin somewhere in the handful of months to come will do a 20 to 50% correction. And if it were to do that from 50,000, a 50% correction would put Bitcoin at 25,000, but a less correction would put Bitcoin right around this area. So, it's all kind of adding up. We don't know exactly when that correction will be or how it will play out, but this is a good indication as what could be coming. And so here you see, this is the third cycle. And as soon as it breaks this level of the measured move, the triangle for the measured move, it was off to the races from there. So here we have that mapped out as December 2024 to when the parabolic run could actually start to take off. So this is a really interesting timeline to have on your charts and on your timeline horizons for how long you have to prepare. That's why I look at these charts. I want to know, how long do I have to get my positions, to feel happy with what I've got, to keep accumulating. That time is on our side to give us the best possible chance to get positioned, okay? So that's how I'm looking at things. And now the real reason for why Bitcoin has been pumping. Are you ready for it? It's this. It's not the Blackrock Bitcoin ETF. That has been circulating in the news for years. That is just something that the news put out as a catalyst that played on what's already happening in the macroeconomic scene. The Federal Reserve paused interest rate hikes for the second time, and historically, they don't start raising again in the middle. They go through a whole entire cycle of pausing, and that's that. So what does that mean? They're stopping bleeding the economy for the moment. They've paused the rate hikes. And now we are coming into this atmosphere where people are going to be more comfortable with those risk-on assets. And here I have a clip from famed investor RAOUL on the macroeconomic environment. He is also an economist, and I find it really interesting what he says about why this cycle is geared up to be one of the most explosive cycles in history.
This is macro spring and crypto spring. The cycles are actually the same thing. The Bitcoin halving actually just relates to the macro cycle.
Let's talk about that.
Which is all interest rates in 2009 got reset to zero everywhere. It was a debt jubilee. It was a great reset. Nobody understands this because everyone wants their debt jubilee was to forgive all debt. They didn't. They forgave all interest payments. So what happened is every government on earth reset their debts between 3 and 5 years. So we've got this 4-year cycle, which is the Bitcoin halving cycle, which is the economic cycle. They're all the same thing. So now we're in the phase where we need to pay the interest on the debts from the pandemic.
Okay.
In 2024, 2025, those went exponential. And the only way of doing it has been put it on the balance sheet of Federal Reserve. So all balance sheet growth of the Federal Reserve was just the payments of the debts, the interest. So nobody's paying interest, even though interest rates went up. They don't pay them. They pay them for this period. When it comes to actually pay the interest, they stuff it on the central bank balance sheet. So nobody can afford to, because the government is 100% of GDP in debt, just over that. There is no way they can have interest payments here, because what's going on today is they have to keep issuing more bonds and more bonds and more bonds.
To pay the interest from
the previous ones. So they can't do it. So the conclusion of that is there is only one outcome to everything, which is more cowbell. They either stop yields rising, like in Japan, it's called yield curve control.
Okay.
And what that is we will pay this price, let's say 5% on bonds, regardless of how many you sell us. And to do that, they print money. Or
it's either more liquidity.
Or I think they're trying to overshoot with inflation on the downside, bit of unemployment rising. So then they have the cover to cut interest rates.
Okay.
And stimulate. Election year, always stimulus. So all roads lead to more cowbell.
If the Fed does end its ongoing tightening, cuts rates, or even resumes quantitative easing, what is the guarantee that that will impact crypto asset prices? According to Powell, this has been the plan all along. It was Satoshi's plan all along to have the halving cycle coincide with the global 3.5 to 5 year macro cycles.
So what is actually going on here? Basically, Raoul Pal is saying, which I agree with, and which I want you guys to know, because like I said, when everyone's looking left, we go right. That's it. We are playing chess, and we want to be not 1, not 2 moves ahead, 5 moves ahead, and we can. So he's saying that it coincides with the macroeconomic cycles, which are 3 to 5 years, and that it actually was planned that way by Satoshi Nakamoto, the pseudonymous creator of Bitcoin, when it was released on the backs of the last recession. So he's saying that this is all coinciding, and that election years are typically stimulus, bull years that tend to be bullish because they want to remain in power. So all of these things lining up together with a Bitcoin halving that makes Bitcoin even more deflationary and scarce. This is all lining up to be a big explosion to the upside. Okay, so it is inevitable. The Fed has just paused rates, and this is why people are bullish. Okay, this is why. So here, now I want to shift gears a little bit to, okay, everybody is paying attention to Bitcoin and what will happen with Bitcoin. It's great. But if you want to grow your wealth, let's then start looking a few moves ahead, starting with Ethereum. So this whole hype and this whole new macroeconomic cycle where people feel more comfortable getting into these risk assets than ever, and even Bitcoin that is now acting as a flight to safety, according to Blackrock, which, let me say something about that before we continue. Blackrock infamously went on to say that it was 2018 that absolutely none of their clients were interested in investing in Bitcoin, no interest whatsoever. He went on the news and he said this, and you know what? That's absolutely completely untrue. The only reason that Blackrock would ever deny that not a single customer of theirs was interested in Bitcoin in 2018 is because they were getting ready for it. And there is absolutely no way that Blackrock is going to come out and condone this asset without having those rails ready to take your money. You feel what I'm saying? You following what I'm saying? So Blackrock doesn't want to condone something that it doesn't completely have set up yet to start to be the leader and bringing in money for this asset. Imagine Blackrock talks about the fact that their clients are looking to invest in this asset, but they're not ready. In fact, they know they're years from being ready. And so what do instead? They crap on it, to find a better word, not to cuss here on this YouTube. They try to talk like they're not interested at all. They try to say it's zero interesting to them. And when people see that in the mainstream mentality, that watch the news and get swayed by it, they think, oh, see, BlackRock doesn't care about it. Nobody cares about this. This is not going to be here to stay, but you know better. So that's enough on that rant. Moving right along, looking right while everyone's looking left in this case could start with Ethereum because we know the flow of money. It starts in Bitcoin. That's when we get everybody excited and new money comes into this asset class. And then that new money flows into Ethereum next. So I know a lot of people are kind of counting Ethereum out and looking straight to the altcoins, but it is a good hedge against all of the other altcoins, whether they be large caps or mid caps or even low caps, as one of the more stable coins in your portfolio. So I don't think that you should count this out. And here are the reasons why, okay? Here's a tweet from OSF Rect. Imagine you had zero risk in crypto and wanted to get involved. You see that Ethereum has underperformed BTC by 28% year to date. Ethereum has underperformed SOL by 185% year to date. And you know that a spot ETH ETF is on the table, which has been the main driver of Bitcoin. Wouldn't you long ETH? So he's basically saying, okay, why is Ethereum not doing anything? Why is it so stagnant? So here we have Ethereum gearing up to what looks like a bull flag, and we're about to break out of that bull flag. And I've charted out here the all-time high, which is around 4,900. It is currently a 2.6x down from its all-time high. And potential price targets that I have for Ethereum this cycle could be anywhere from $15,000 to $20,000. If you want me to do a deep dive on how I get to those numbers, I'll make another video. But for the sake of this video, I'm going to keep this part short and sweet. So long story short, we're an 8x from the 15,000 and a 10x from 20,000. And let's say it's just 10,000, just 10,000. We're still incredible amount away from that. And it's a good, solid, more stable coin to have in your portfolio that won't get affected as much by the ups and the downs of Bitcoin. So that being said, let's have a look at why Ethereum could be poised to rally a lot more than some people think and could take everybody by surprise. Here is the ETH Bitcoin chart. And this is basically measuring how Ethereum is performing against assets like Bitcoin, against Bitcoin in this case. So Ethereum is currently underperforming Bitcoin. As you can see, it's broken down out of this triangle formation. And we are just waiting to see what's happening here. So as an investor, when you want to invest when the risk is lowest is not when Ethereum's breaking out and going crazy. It's when it's here underperforming while others are performing. And that's what I want you to start training your brain to do. Look into the altcoins. I don't want you to always try to hop into the sexiest, shiniest coin of the moment because that's not going to maximize your portfolio. What will maximize your portfolio is not following the herd, not following the green candles and the pumps, not following the news, but doing your own research like this and understanding, okay, if I understand where this asset is headed, why don't I invest in this? Well, everybody is chasing Solana pumps. Food for thought. And now, apart from the fact that Ethereum has typically picked up steam after Bitcoin has had its show, here's also why it's set to melt faces, like I said in the intro. We've got the ETF, spot Ethereum ETF filings from some of the biggest players in the game. We know this is coming next. And as soon as the Bitcoin ETFs get approved, Bitcoin spot ETFs, Ethereum is next. We know this. We know this to be true. And yet it's most definitely not priced into the Ethereum price, especially not at this point in time. So here we have news from in September, VANECK and ARC filings officially start the clock for the spot Ethereum ETFs. So let's see on what time horizon we could have where all of the hype starts coming around Ethereum, because you better believe it's coming. It's coming and it'll come in hot. So let's get ready before then. And down here we have the race for United States' first spot Ethereum exchange traded fund has officially begun after now filing ARK Invest and VANECK. And in a series of tweets, Bloomberg ETF analyst James Seifert noted that as opposed to the previous submitted S1 filings, the 19 B4 filings mean that the countdown for a decision by the SEC is now in motion. So when can we expect this spot Ethereum ETF to be approved? We have the spot Ethereum ETF race is officially on. It's early, but I'd estimate a final deadline on these applications to be around May 23rd, 2024, just around 1 month after the halving. Notably, we didn't see a VANECK spot Ethereum ETF from VANECK earlier because they filed for this all the way back in 2021. So again, this has been around in the news headlines forever, but it's actually finally coming to fruition. So if we know this is happening, then why wouldn't we act on this now instead of waiting? Here we have Kathy Wood just basically laying it out for us about what ARK Invest says about Ethereum.
We have become just as bullish on Ether. I have been surprised at how Ether and the Ethereum network is mushrooming with stablecoins, NFTs, decentralized finance. It's clearly satisfying a huge unmet need.
So she is impressed by Ethereum, and it is fulfilling a huge unmet need in DeFi, NFTs, and so much more. So they understand the demand for Ethereum and why this technology, this smart contract technology, is so revolutionary. And of course, it is the logical next step for all of these massive institutions to then get on the Ethereum ETF, spot ETF boat. And then we have here Grayscale moves to convert Ethereum Trust to spot ETF amid the surge in ETH future ETF launches. So earlier, we had a bunch of Ethereum futures ETFs launched, and that is kind of getting ready to pave the way to convert that to a spot ETF. And Grayscale notoriously has a lot of crypto products and investments and it would be easier just to directly convert those crypto investments to ETFs. Ethereum is one of them. So Grayscale's Ethereum Trust on path to become spot Ether ETF. On October 2nd, Grayscale announced it has submitted its U.S. Securities and Exchange form to convert its Ethereum Trust into a physically backed ETF. That's exciting news, guys. That's exciting news. So meanwhile, that's happening and ETH isn't moving. So based on the theory that the Bitcoin rally is because of the Blackrock ETF speculation, Ethereum would be moving too, based on all of these all this other news claiming that all these institutions are really interested in Ethereum as well. But no, this is the flow of money, and it has been since the inception of Bitcoin. First is Bitcoin, then is Ethereum, then is large caps, then it's mid caps, and then small caps and NFTs. And this is the other reason why Ethereum is going to melt faces, probably shock a lot of people. BlackRock infamously came out and said, all things will be tokenized, period. Stocks, real estate, everything will be tokenized. And here we have JP Morgan debuts tokenized BlackRock shares as collateral with Barclays. And guess which blockchain they're doing it on? JP Morgan has carried out its first live blockchain-based collateral settlement transaction involving BlackRock and Barclays, the U.S. banking giant, said on Wednesday. JP Morgan's Ethereum-based ONYX blockchain and the bank's tokenized collateral network was used by BlackRock to tokenize shares in one of its money market funds. The tokens were then transferred to Barclays, So you get the point. Ethereum. So the tokenization of traditional financial assets is a big deal for banks, and it's an area JP Morgan has been leading the charge with, now joined by the likes of Citi and others. So this is going to be absolutely massive. And I want to show you one reason why. So this is going to be absolutely massive. And then here you have Justin, the Swiss bank, Cantonal Bank, to offer Bitcoin and Ethereum custody services. So the first thing banks are going to look at is the top two in the market with the most liquidity, the most stable of them all, Bitcoin and Ethereum, which is enabling smart contracts. Those are the first two that all the banks are going to look at to custody, to deal with, to, get involved with. So there are so many reasons why Ethereum is next in line to capture some of that market share. And I want to show you one more clip about Ethereum.
We see more and more use cases, especially financial services functions, being deployed on-chain. We expect revenue and subsequent market cap to accrue to the underlying blockchain Ethereum and its native currency, Ether. Based on the global financial services market cap, we believe this represents an addressable market of over $20 trillion in the next 10 years. Further, Ether is increasingly an important form of money in the economies built on top of Ethereum. It is the most, for example, liquid trading pair in decentralized exchanges and NFT markets, and the most common form of collateral in DeFi lending, and is also necessary to pay transaction fees. So if Ethereum were to become a significant platform powering global financial services, and Ether were to maintain its critical role as money in that economy, we expect that it could also capture a portion of the global money supply, which today currently sits at $122 trillion.
So there's Frank Downing with ARK Invest Ethereum breakdown. Now, in case you missed it, the important slide was the last one in which ARK projects Ethereum's market cap to exceed $20 trillion over the next 10 years. Now, there's a little bit of math to break down how much that equates to per Ethereum, but if you take $20 trillion and divide it by all the outstanding Ethereum, you get to a price of just over $167,400.
Wow. So that's a lot to unpack, but basically their forecast predicts that Ethereum will reach a $20 trillion market cap within the next 10 years or by the end of this decade. And that would put the Ethereum price at a whopping $167,000. That is absolutely astronomical. Again, this is a very, very long range prediction for ETH, but like I said in the beginning, I think 15,000 is within the realm of possibilities for this bull run and possibly beyond. So let's start looking to create our strategy now for what the future of the herd of money is going to pour into. And lastly, as I promised, I've got a surprise altcoin for you that many people hate, actually, but that could just very well become one of the first spot altcoins to be offered by major institutions. And that is, dun, 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 Bitcoin Cash. Bitcoin Cash, you heard me, the very, very controversial Bitcoin Cash, which is a hard fork of Bitcoin, could just be one of the top altcoins in line to get an ETF by big institutions. Here you can see the Grayscale Bitcoin Cash Trust is pretty large in volume, $71 million AUM, and it is one of the bigger altcoins on this list. So that being said, it's something to consider. When you're looking to invest in new altcoins, I want to urge you not to be get involved in tribalism. Like I said, don't hate it, don't date it, just trade it. So when we're looking to build a portfolio, it's not necessarily always about what resonates with you, although this is a huge part. Sometimes it's thinking ahead and thinking, what is everybody else going to do? What is everybody else going to do? And why is this a possibility? So if you want me to do a deep dive on this very hated coin, Bitcoin Cash, and why I believe it could have a pretty significant run this bull run as well, I will do that. Here I just broke down the all-time high for Bitcoin Cash, which is $4,000 and $4,355 from the 2017 cycle. It did not break its all-time high this past cycle, and it's currently 18x from its all-time high. So maybe worth thinking about getting a little exposure to this coin that could be one of the next in line for a spot ETF. So that being said, that's all. I hope you got a lot of value out of today's Macro Sunday session, and I'll see you tomorrow.